All right. Good morning, good afternoon, depending on where you're tuning in from, and welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hey there, Jay. Hopefully you're doing well. So we should be live both on Facebook and on YouTube now. So if you guys can hear me out there, if you're just now getting into the chat or getting into today's stream, make sure, as always, smash that like button first and foremost, but also let me know you guys can hear me by typing in VV Nation into the chat. Let's get that going here. So for anybody new tuning in for the very first time, as always, what we like to do here is we like to cover the most comprehensive trading app available to you, and that is the VectorVest Stock Advisory app. As everything that you need to be successful in the markets, and what we're going to be covering here today is some of the general rules that we talk about here at VectorVest whenever we do training or coaching or any of our seminars. There's some key money management rules that we typically like to advocate for, and we're going to be discussing them here today since, markets are crazy. Now is more important than ever to make sure that you have proper risk management working for you. So the little bit of the flow that we go over is, first and foremost, we start to take a look at what's going on here in the market. Then we'll dive into our topic of discussion. And then, as always, we'll finish off with the fan favorite, and we'll analyze any stock that you want to take a look at in less than 10 seconds. So without further ado, let's jump right into the mobile app here today. So as we can see at the very top, we see the major indices, and the Dow is down 0.7%, Nasdaq's down just shy of a full percentage point, S&P 500 down over 1%, VectorVest Composite down 1.2%. That market action has our needle 3 ticks into the red. Therefore, today the market timing gauge is bearish, and VectorVest does not advocate buying any stocks at this time. As always, if you ever wanted a comprehensive analysis of what's going on in the market on a daily basis, make sure to tune in to the daily color guard report found right here, where we talk about what's going on today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, watching this quick video will make sure that you never get caught off guard with what's going on in the market, and make sure you stay up to date with the current environment here. After that, we then scroll down to get to the color guard itself, and as Drew stated just a moment ago, it's been quite a wild ride. We've had a lot of green lights starting to appear as of late, green and yellow mixture. And today is the day that we're getting 3 red lights across the board, wiping out a lot of the nice gains that we've seen here today or over the last few weeks. So as always, whenever we look at the color guard here, we get these colors based on the movement of the indicators. So the first one we look at is the price, which is referring to the price of the VectorVest Composite. This is an arithmetic indexed average of about 9,200 stocks, and it gives you a better representation on what's actually going on in the markets rather than just looking at small subsets of the market. So since it's red, that tells us we are now lower day over day and week over week. The second one is the RT, or relative timing. And as we can see, it is also red since we're moving lower day over day and week over week, and we remain below that level of 1. I'm not sure if Facebook is up and running with the stream. Let me double check that. Should be. Shows that it's streaming. Why is it? Hold on. Give me 1 second, Jay. Let me see. Let me go double check this. We should be live, but why is it not saying that we're live right now? Okay, here. Just 1 moment, folks. Apologize. All right. You know what? We're about to say don't care about Facebook and just stick with here because it shows that I'm connected and it shows that I'm live, but it's not displaying all of a sudden. All right, cool. Facebook is great. Now it's showing that I'm live. Okay, so let me try this one more time. I see the event or the actual live stream. All right, you know what? Hey, Facebook works, it works. If it doesn't, it doesn't. At this point, don't even care. All right, cool. So that's all good on that. So the buy to sell ratio, the next indicator we're getting into, buy to sell ratio looks at the overall health of the market. Cast on a scale of 0 to 2, or excuse me, since it's a ratio, above 1 would indicate that there's more buys and sells in the market or that there's overall market strength. Below 1 would indicate that there's more sells and buys or overall market weakness. Yeah, it is what it is. That's fine with me. Appreciate that, Eric. Glad you could be here. Tuning in from Belgium today. Welcome. All right, so the trends of these three indicators are comprised to come up with our MTI or our market timing indicator. This is now cast on a scale of 0 to 2, and it's looking at the underlying trend of the market. So since it's above 1 currently, that tells us the underlying trend of the market is up. Now, after the MTI, we then get the trend column, which shows two parts of the trend each and every day. The first part refers to what we like to call the primary wave, which is just simply the short-term or weekly trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than what it was compared to 5 trading days earlier. The second part is looking at the underlying trend or the MTI, and since the MTI is above 1, the underlying trend of the market will remain up. Then last but not least, we finish off with the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. And as you can see, we still remain in that confirmed down situation as of today. Good morning, Mark. Hopefully you're doing well. So last but not least, as always, before we move on from the homepage, let's take a look at the advanced to declines down here at the bottom. And looking at it, whenever we're looking at the advanced to declines, it's showing the number of stocks moving higher for the session compared to the number of stocks moving lower for the session. So right now, about 18% of stocks in the market are moving higher, and about 69% of stocks are moving lower for the time being. So therefore, we want to typically see a 2-to-1 ratio in either direction, depending on which way the market is moving. And right now, we clearly have over a 2-to-1 bias to the downside, telling us that, if we got into a bearish trade right now, the odds that it's moving in our favor are extremely high. And that's what we want to do, is we want to make sure that we put the odds in our favor. So if you're going to be taking a bearish trade today, we have the moves. We have the market moving in our favor. All right. So with that, let's go ahead, jump right into our topic of discussion, money management. Now, everybody always uses that term money management of, managing your portfolio, managing all this. But at the same time, what are some key rules? That's one thing that nobody really talks about, is the key rules that you can actually apply to your own portfolio to keep track of everything and to make sure that you, or have that survivability factor, if you will. It's not always about making sure that you're making money every day. It's about making sure that you're able to be trading tomorrow. And so if you wreck your portfolio today, you're not going to be able to trade tomorrow. Proper money management can help mitigate that risk. So even if you do end up taking, a more risky trade that you may not be too comfortable with proper risk management, you can still, get the benefit if it does continue to run. But at the same time, if it doesn't, you have some rules in place to make sure that you cut your loss quickly, so that way your winners can really thrive. Hey there, Chris. Hopefully you're doing well. Any updates on Tesla? Stick around to the very end and then put that in there, and you may get some updates on that. All right, so let's go ahead and talk about money management rules. So we'll go ahead and just jump into the premium, or actually we'll go to stock pick ideas. We'll just pick out some random stocks. It doesn't really matter which stocks we're going to be talking about because we're not really focused on stocks. What we're going to be focused on is going over 3 essential rules of proper risk management. So if you guys have your pen and paper down, that's fine. Get ready. Here it comes. If you need me to repeat anything, don't hesitate to ask. I'd be glad to do so. So the first rule of thumb that we always talk about is what we call here at VectorVest the 1% rule. Simply put, you never want to lose more than 1% of your overall portfolio value in any individual position. What does that mean? So let's put some numbers behind that now. If you had, let's say, $100,000, Well, you were going to buy 10 stocks with that $100,000. So $10,000 goes into each individual position. All positions are dollar weighted. That is key. That's a key core philosophy here at VectorVest is, we advocate for our subscribers to stay evenly dollar weighted, because if you start getting over leveraged in one position and that position goes against you, that can wreck a lot of chaos in your portfolio and create a lot more headaches than the joy it could bring you if it did happen to go your way. So that's why, we don't ever advocate, buying more on the dip or buying that dip, because we've seen the effects that it has when you don't evenly dollar weight your portfolio and you allow one position to really dominate your holdings. And then when that position goes against you, it does a lot more damage than it should have. So as long as we keep things evenly dollar weighted, the 1% rule, once again, going into it, if you have $100,000, you put $10,000 into each of your 10 stocks, then 1% of that $100,000 is $1,000. So therefore, that $1,000 equates to a 10% stop on that individual position. Now, it's not saying you have to go all the way to that 10% stop. No more than that 10% on that individual position. So if you wanted to do less than that, if you wanted to do 5 to 8%, that's fine. It still meets that rule of thumb, but no more than 1% of your overall portfolio value in any of your individual positions. Now, if you don't have $100,000 and you have a basket of stocks, let's say you have 20 stocks or 5 stocks or however many stocks you have, that's fine. What you have to do, just multiply your overall portfolio value by 1%. And then whatever that is your maximum loss that you should be willing to take before cutting that position and moving on. No more than that, though. So if you wanted to do less than that, that's fine, but no more than that 1%. That's an easy way to figure out where your max loss should be right out of the gate before you ever even get in the trade. You will know automatically where your max potential risk is before you cut that trade and move on. Second rule of thumb is set yourself a target. A lot of people don't end up, as simple as this sounds, a lot of people out there don't end up doing this. And it's an extremely easy practice to be able to initiate in your portfolio. But the one thing about the target is it comes down to your personal preference. If you're somebody who's shorter term, maybe you're going to be shooting for 20, 30, 40% gain before you take your target or before you take your profit off the table and move on. Now, if you're somebody who's longer term oriented, maybe you're planning on holding for a few years, maybe even longer, then your stops are probably, your target's probably going to be a lot higher. So therefore, you're probably looking at 100%, 200%, whatever that may be. Whatever that answer is, and you don't have to put it in the chat today. I'm not asking anybody for what their targets are. But ask yourself, be honest with yourself. What type of a return are you happy with getting on any individual investment? And whatever that answer is, set that down, write it down in a journal, write it down in a notebook, type it down on your notes on your phone, whatever you want to do. But write that down so that way you know where your target is going to be and when you're going to take your profit off the table, once again, to help you remove your emotions out of your investing and stay systematic on it. Now, let's see your guys' insight. So how many of you guys have had a really good gain in the stock in your your investing career, and it was up huge, and you think, oh, it can keep going. It's done this already. It looks like it definitely can keep going. Only to watch it turn back around and start heading south and slowly giving back your gain that you had, a great gain that you had, and just slowly watched it diminish and turn into either a small gain, a loss, what have you. Type in a 1 into the chat if you've ever had that happen. Type in a 2 if you haven't. Maybe you haven't. That's fine. Let's see. seeing a lot of ones starting to come in too many times. Joy, I can relate. I know the struggle. So that is all the ones coming in right now are exactly why setting yourself a target is extremely important, because it happens to everybody where you have this gain that was up 50, 60, 100%. Maybe you're trading options. Maybe you made 1,000% in an options trade. And you think, oh man, I just turned $1,000 into $5,000 in 24 hours. Oh, and I still got time left on my option. Oh, it's definitely going to make me even more. Only to close it out by the end of the day that day with a loss. Set yourself a target. Don't get greedy. Yeah, Lou put it best. Greed is my worst problem. Greed is a lot of people's worst problems. But that's why proper money management, what we're talking about here today, is so important. Because with proper money management, that will quickly change all of those scenarios and put you profitable in those scenarios and make sure that they don't happen ever again. So let's quickly recap. 1% rule, never risk more than 1% of your overall portfolio value in any individual position. So don't lose more than 1%. Set yourself a target, whatever that may be. And then the third rule that combines with all of that is the 50% rule. The 50% rule simply states anything over a 10% gain in a stock, never give back more than 50% of that profit. So if you hit a 10% gain, at worst case scenario, you should be walking away from the trade with 5% gain. Instead of risking that and giving that back and watching a 10% gain turn back into a 2 or 3% loss, lock that 5% in. You can always get back into a trade later on, but you can't go back in time and close out a trade from a previous date. If you can, send me a direct message and we need to talk, because so far I have never been able to see that. So that being said, that one rule, the 50% rule, is something you guys see on my Trading for Charity events. Any of the live trading that I do here at VectorVest, you guys see me time and time again following those kind of rules. I go way less than the 1%. They're 10% per position. I do way less than that because I'm more aggressive. I don't want to stick around to wait and find out. But that 50% rule, since I started becoming more disciplined from the VectorVest teachings and I started following that more religiously, I have seen a tremendous boost in my own personal portfolio, specifically from that one tip. So this is why, once again, these money management rules, they sound really simple. And if you guys are tuning in, if you guys aren't a subscriber and, you say, oh, this is dumb, I don't need to see this. Oh, I already know all this. No. I guarantee you're the one who has made some of these mistakes, and these rules can help you. No matter who you are, even the best traders out there can still allow their emotion to get involved. And as we talk about week in and week out, emotions are the number one portfolio killer. So if you have these rules of thumb and you have these disciplines and you practice these and you can stay disciplined to that, this is where, you can now turn yourself from a mediocre trader to investor to a successful investor just with these few simple tips right here. What about options? You can't use 1%. Well, you're also using 10% of what you would use for the stock bill. So adjust it accordingly. There you go. Simple as that. You can use options, but you're not using all that same amount into the options that you would a stock. So adjust it accordingly. Simple as that. So now we've covered the 3 key money management rules. As you can see, all 3 of those can work together. Just to give an example, going with that $100,000 portfolio, $10,000 in each individual's position, 10% stop, let's say, just assume that full 1% 10% stop on the max loss right out of the gate. You have, let's say, a target of 50%. So now you have 2 out of the 3 parts of your money management predetermined before you ever even get into the position. You know what your target profit is going to be. You know what that target price can be because you can calculate it. You know what your max loss price is going to be because you have because you know your entry, you know what that 1% equates to. So let's say you have that 10% loss, 50% gain. Now let's add in that 50%, the 50% rule to it. So you get into a stock, shoots off right out of the gate. You see a nice steady rise. 2-3 weeks later, you're up 30, 40, let's say 40%. Close to that 50% gain, but not quite there yet to lock that target in. Well, all of a sudden, bombs start flying over in Europe. I know, very real situation going on right now. But that just goes to show, market starts diving after that. Well, all of a sudden, you're now up, let's say 25% instead of that 40% you were at the highs. Well, you know 50% of the 40 is going to be 20% is your max that you should be walking away with, or is the least you should be walking away with. You want to get out a little bit early. I'll just take that 25%, move it to the sidelines instead of risking it for the biscuit, waiting, and then, maybe 2-3 weeks later, everything calms down, markets start rallying again. You can always get back in later, but now, instead of sitting through all of that uncertainty, all of that fear, sleeplessness that you get from panicking about what's going to happen tomorrow in your positions, you've locked that gain in. You now have some of the house's money, and you don't have to worry about it at night. Less stress, less time to have to manage everything, and it just makes it a lot more simple than anything else out there just by following those few rules. Now, let's take another lesson that we talk about quite often here on our streams and talk about the 4 tips of knowing when to sell. We talked about RT crossing below 1, price volatility showing in the stock, using a 40-day moving average or using a moving average to signal that the price is starting to reverse. And then last but not least, getting a sell rating. Well, let's say you have your target, you have your max loss, you have your 50% rule, but you still like really looking at charts and you still like following your charts. That's fine. If you have your chart set up however you want it, I'm not going to let's go ahead. I'll get into the graphs a little bit here today. Let's go ahead and we got moving averages. We got a 3 and 8 exponential. That's fine. Let's go to the lower graph indicator. Toss on MACD. There we go. Let's say you're using the MACD as your short-term price trend indicator. And anytime the MACD line crossed below the signal line, that was another indication of knowing when to sell. Well, let's take this stock, for example. Zoom in to a 3-month time frame. MACD, let's say you had 45% here, and then the stock starts moving sideways and then crosses down here. Now you're still basically flat. You're still around 45%, let's say. All right, I'm going to lock my profit in. The MACD line crossed negative. I haven't met my 50% target, but I'm not going to give back more than 50%. You're still not giving back more than 50% of your total profit. Locking it in, moving to the sidelines, waiting for the conditions to get better before redeploying your hard-earned cash. Well, you can apply these same rules and use your charts as well all at the same time. You can combine the power of both of them together to really enhance and increase your portfolio performance, and just a few simple steps. So this is why, if you have these rules in place, you can take advantage of it. Or for anybody that was tuning into the Trading for Charity event on Tuesday, the extended version that we did, where we did the live trading right out of the gate from 9 a.m. until about noon. If you're doing some day trading, let's say, you have your stop set in place, you have your 10% at your max. Let's say you're going to do less than that because you're day trading. Let's say you have a 5% max loss on your position, or max loss as your criteria that you're going to be using. Well, all of a sudden the stock starts running. You're up 10, 20% in 15, 20 minutes. Not unrealistic. We've definitely seen it time and time again. That can happen. Well, all of a sudden the stock starts pulling back. Now, instead of being up 15%, you're up 9. Well, you take that 9% and move on. You follow that 50% rule after a nice little pop, giving yourself a little bit of cushion. You have some support, you have some resistance that you're keeping an eye on, but it fails to break through that resistance and then it starts pulling back. Instead of giving it all back, you take a little bit of that, or you give, your stops a little room to run, but not very much. If it meets it, take the profit, move on, and then rinse and repeat that process. We like tourmaline oil. We paid $225. I tell you guys are talking about oil back and forth to each other. That's fine. But yeah, so these same rules that we're talking about here, money management rules, can be applied whether you're a day trader, a swing trader, position trader, long-term investor, whatever you want to call yourself, no matter what type of investor you are. These same rules apply to everybody. That's the great thing about it. It's not just, talking about specifics of one type of investor, one type of a trader. What we're covering here today is important to every single person who has money in the stock market. So hopefully, hopefully you guys are picking up on how important these money management rules are and how to apply them to your own portfolio, because if you want to become a successful trader or a successful investor, either one, start putting these to use, start staying disciplined to these, and I guarantee you will see the benefits into your own portfolio in a very short period of time. So that's going to do it for my long-winded rant and talk about, I really wasn't making this or planning on making this topic this long, but we want to drive home the importance of money management. Want to make sure everybody's on the same page. So hopefully that does. So if you guys have any questions on those rules, feel free to let me know. If you want to, you can always go back, replay the stream to write down those rules later. But if there's no other questions, let's go ahead and start to see the stocks you guys want to see analyzed. How do you become a millionaire? Well, the best way, so my father used to tell me the easiest way to make $1 million, Fireblazer, was starting off with 2 million. All right. So yeah, if you guys have stocks that you want to see analyzed, go ahead and start throwing those out there. We'll get a few of them here today, get those analyzed, and we'll start wrapping it up. And while we're waiting on that, don't forget, as always, at 2 o'clock Eastern today, we do have Glenn coming on doing Trending Thursday, talking about all the headlines that are impacting the markets right now. So if you want to see what headlines are driving the markets, stay up to date with that. Make sure to come hang out with us at 2 o'clock. Oh, excuse me. At 2 o'clock. Sorry about that, folks. At 2 o'clock with Glenn. And also tomorrow at noon Eastern, we have Trading for Charity. The last one for a week and a half, or about a week. Because next week I will be off all week, so there will be no Trading for Charity, no Jockey Club for me at least, no afternoon market action for me, nothing. So I will be gone all week next week. So getting some much needed R&R, hitting the sauce early. Yeah, we'll take a look at that one, Jay. So yeah, next week we will not be doing any Trading for Charity event. The week after, we'll be back with Trading for Charity, getting into the last portion of our Trading for Charity, the final stretch of our Trading for Charity event. So make sure to come stop by tomorrow, and also stop by, not next week, but the week after, as we make our final push to try to meet some of those goals that we have set. All right, so TSLA, Tesla. Tesla, good long-term potential. Does have less risk associated with it because it has a strong balance sheet, but it's been in a steady decline. Right now, continues to decline. RT of 0.36 tells us it's in a really sharp decline. Overall, stock has good fundamentals, but right now is not the time to be keeping it in your portfolio, folks. If you didn't know that already, It's only taken 11 months. I'm happy to finally bring you guys that announcement that right now is not a good time to add or have Tesla in your portfolio. If you haven't been able to tell throughout 2022, you're welcome. All right. CCRN. Let's go take a look. CCRN, good long-term potential, less risk associated with it. You're in a steady short-term uptrend, even with that pullback right now. Overall, stock is favorable here still. But as always, keep an eye on that timing. Also, keep an eye on the overall market timing as well. Market timing, I got to preface this because I've seen some people having some issues with this whole concept as of late. Market timing trumps any individual rating that you get on the stock. So what I mean by that, no matter what the recommendation or rating is that the stock has, whether it's a buy, hold, or sell, doesn't matter. If the overall market timing is telling you do not buy, we don't care what the rating is on it, simply hold off from buying it. Easy as that, folks. All right. NVIDIA. Good long-term potential, a little less risk associated with it. Nice, steady short-term uptrend. So overall, the stock is favorable here. AMD, good long-term potential, less risk associated with it, but the stock is pretty much flat on a short-term basis. Overall, it's a good stock. Just need better the timing to pick up before we'd ever want to get on board with this one. SOXL. With an ETF, VectorVest makes it extremely easy to be able to analyze any ETF. Because they don't report quarterly earnings, they don't have balance sheets, the RV, RS, the fundamental indicators always going to be pegged at 1. So when analyzing any ETF, your primary focus is RT. At 1.04, it is in a slight uptrend, but not strong enough of an uptrend to really make us say, let's jump on board with it. So therefore, neutral right now, wait to see that timing pick back up before jumping on board. LKNCY. Poor long-term potential, a lot of risk associated with it. However, you do have a pretty strong short-term uptrend, so overall the stock is favorable right now. Hey, Simone. Hopefully you're doing well. Glad to have you here today. All right, let's see. AZPN, good long-term potential, less risk associated with it. You're in a slight uptrend, but I'd be careful with that RT. Overall, the stock is favorable, but personally, I want to see that RT at 1.1 or higher. TRMLF. Good long-term potential, but does have a little bit more risk associated with it. You're in a slight uptrend. Overall, the stock is favorable. I saw you guys talking about the dividends, so let's go ahead and take a look at that real quick. Stock currently is undervalued. And then dividend information. Dividend 56 cents annualized. Dividend yield about 1%. Dividend safety 70, so that's pretty good. Dividend growth 16%. Overall, the stock's dividend is about a little bit better than average, but not by much. DFEN. We'll do a couple more here today. DFEN, RT of 1.41 tells us pretty strong short-term uptrend. Overall, definitely favorable. KR. Kroger, good long-term potential, but a little bit more risk associated with it. You're in a steady short-term uptrend. Overall, stock is favorable. And we'll do 2 more after this. We'll do UVXY. Looking at the timing, it still is in a short-term decline. But as we know, volatility can change very, very quickly. We are at pretty much the low for the year. Going to be interesting to see how it handles itself. Up a little bit here today. RT at 0.54. Honestly, I'm surprised we're not seeing it higher based off of the data, the economic data that's come out, and the way the markets have been trading since that point. But hey, is what it is. Overall, not favorable right now. Need to see that timing pick up a little bit more. All right, and then one for Maria, STLD. STLD, great long-term potential, less risk associated with it. really strong short-term uptrend. So overall, the stock is definitely favorable here. Now, if I didn't get to analyze your stock, I do apologize. But as always, if you're a current subscriber, all you got to do is pull up the app from wherever you're at on the go, tap on that little magnifying glass in the upper right-hand corner, type in your ticker symbol, and you can get the same analysis on your own right here like we're doing right now. If you're not a subscriber, go to the comments section or the link below or the description below, click on that link, sign up for the 2-week free trial, and put the power of the VectorVest Stock Advisory app on your side. As the old saying goes, seeing is believing. So what are you waiting for, especially in these market conditions? Now it's more important than ever to have the power of the Stock Advisory app on your side. So jumping back to the homepage real quick, take a look at how things are updating. Right now, the Dow down about 0.75%. NASDAQ continuing to pick up, now down 1.1%. S&P staying about flat at 1.2%. VectorVest Composite, though, continuing to move lower, down 1.4%. So therefore, we are still 3 ticks into the red. The market is bearish, and VectorVest does not advocate buying any stocks at this time. Scrolling down, we still have those 3 red lights across the board: the price, the RT, and the buy to sell ratio. The MTI is continuing to pull back, and looking at the advance to declines, decliners continuing to pick up, advances continuing to pull back. So the bearish bias is getting stronger and stronger here today. So on that note, be careful out there, be safe. If you don't end up coming to tomorrow's Trading for Charity event, 1, I'll be disappointed, but 2, have a happy Thanksgiving. Have a happy holidays, everybody. Be safe on the roads. Don't be that guy that honks and tries to get to this destination as fast as possible, because you're going to cause more people to be late to their destination. Everybody's trying to get there. Everybody's trying to rush. Take a deep breath, be safe, and make sure to, stay calm, relax, and just take your time getting to wherever you're going if you're traveling for the holidays. And then, as always, make sure be here tomorrow at noon Eastern as we kick off our last Trading for Charity event before the holiday, before Thanksgiving. So, on that, thank you once again, everybody. Have a great rest of your day. Have a great weekend. Have a great holiday week next week. And I will see you all the week after. Toodles.